ever wondered why the market always goes against you? Many times after you've bought a share, then share prices started to drop. Is it because that the market doesn't like you? How do we overcome this situation then? M plus Wiz, which alerts on potential entry for trending stocks, might do the trick for you. Is that all for the Wiz feature? Not at all. To find out more, please visit us at mplusonline.com/wiz.
Hello, guys. Welcome to our M Plus Week's highlights for the week. And I'm Louis Lau here. I'll be sharing with you some insights about the stock market at this moment. I think it was a very devastating position for FBM KLCI after it can't really break through the 1,600 level. And today itself, it is also quite having quite a bit of drop. And stocks didn't really perform as what we wanted. And this was also due to the very negative sentiment in Wall Street. And regional peers are also in the very negative tone as well, like Hang Seng, like the Jakarta index as well. Most of them are in a negative region. But again, we are still hoping that the KLCI are in a good position as they are more defensive. And year-to-date wise, I think in terms of the KLCI index, we are still at least sort of positive. Slightly as of I think last Friday is still positive, but today itself it has dropped. Year-to-date position is negative 1%, near to 1% down for the year. But I would say that we are still in a very good position. Why do I say so? It's because FBM KLCI doesn't consist of a lot of technology stocks. So in terms of the defensive nature, we have that. And secondly is about the oil, crude oil, and also CPO price is actually on the way up. Although CPO price has suffered some of the profit-taking activities last week, but I'm still thinking that the earnings season that will be coming in May will be able to support the share price at least until end of May. Okay, so that is my expectation. So normally, what people do is people buy ahead of their earnings and sell after that. So that is what we are looking for right now. So hopefully that CPO prices can sustain and rebound ahead of the earnings season, and then hopefully the share price would also rebound higher. So overall, you can see that today itself, the KLCI has suffered 0.75 down, consumer down, industrial down. So most of them are down, but surprisingly, construction sector is up. Okay, so this is one of the very surprise move. We thought that Reits can actually go up because of the recovery team, and also energy is up right now. So energy is up due to hibiscus and some of the counters under this section like Heng Yuan, Petron M. These are the two main, pulling up, two main stocks that is pulling up the index, energy index at least, because we understand that over the weekend and over the festive season, since the reopening of the borders and also reopening of the economic activities, people managed to travel, and what we heard is that even the fuel shortages is there. You can't really petrol in the North-South Highway and North-South Express Highway. So that is one of the reasons that Heng Yuan and Petron M can have some pent-up demand and that is bringing up the energy index for now. So overall, I would say that we are still maintaining a positive view for at least the crude oil related counters, CPO related counters, and recovering theme, consumer sector, tourism sector, REITs as well. I think we are more positive right now as compared to 3 months ago. And going forward, at least for this quarter itself, we should be able to see some good recovery moves in most of these sectors. So if you ask me, how do I identify, positive sectors at least for the next 3 months, I would suggest you to use the technical charts to refer and make sure that you are choosing those companies that are in the uptrend position. If even if you're not using technical, analysis, but you should be able to look out for um, signs of what we call some good confidence level of how we are going to invest in companies, then perhaps you can use maybe low PE ratio, one of them. But under this scenario, I would love to use net cash position. So if you are looking for companies that are uh, going through a very tough situation like right now, because we are not sure whether we will go into recession or not, but just in case that the recession fear is coming up, what are you going to do about it? So my suggestion is that look out for net cash companies, or they are paying good, healthy dividends companies. So under the crude oil related counters, energy counters, and you can find all these counters that is going up are having certain kind of characteristic. Either they are related to crude oil prices, like hibiscus, or they are having good amount of net cash positions, such as Dialog, Heng Yuan, Delium Energy. These are some of the companies that are having good characteristic in terms of their balance sheet, even though they are not really tying very much towards the crude oil related movements. But since that they have net cash position, they should be able to weather through the next 3 months, or even next 6 months, or next 9 months down the road, based on their current net cash position. So that is what I like about companies that are under the team, and also under having a very good characteristics in terms of their balance sheet. So I've given you some tips and hints on how to select stocks based on what I think is important at this current moment, because PE doesn't matter anymore, because they are trading according to what the crude oil prices, first of all, maybe. Secondly, they are trading on Heng Yuan, Petron M, based on the pent up demand on the refiners due to this scenario whereby a lot of people traveling, there are lesser, I mean, few shortages are there, and therefore people are trading on Heng Yuan and Petron M due to that scenario. And thirdly, they are also trading on those companies that with net cash position in hand, which is Delium, Panergy, Charamin, and so on and so forth. So as long as they have all these characteristics, they will be in the uptrend move. And let's look into some of the charts. I mean, before we look into charts, I just want to explain to you what is the sentiment behind today's share price, and what can we do about it. Okay. So utilities, I believe that there are some companies that are still banking on this high dividend yield, but based on what I understand from this trading sentiment, Tenaga is being sold down again. Despite the recovery theme, so people might be also anticipating that recession fears might be coming, or even this round of recovery theme might not be sustainable. So that's why they're still not too convinced about the recovery theme, and therefore Tenaga is being sold down. But we can also look at services, the consumer product and services. You can see that some of the companies like Bonia, NTPM, FNN, Orient, all these are actually going up. I think it might be due to pent-up demand at this point of time. So people are still buying to some of the maybe Bonia, shops are, having a lot of people queuing up and things like that. But overall, they are quite mixed on this recovery theme. But certainly, if you are looking into all the charts later, I will show you about what are the main gist about, moving forward. What are the essence that we are looking at? What are the catalysts that we are going to monitor? Okay, so let me show you another the chart pattern on most of the counters or even the indices. So let me share my screen again on this chart pattern. So if we are looking into charts, it's very easy to identify companies or sectors that are actually moving along quite well. One is energy. Energy is definitely moving into a uptrend tone, and especially right now when the crude oil prices are surging higher, definitely we are looking into more promising moves ahead. So although it is having some resistance along the 807 level, I am still a believer that in the recent share price movement or even some of the companies under the energy sector will continue to move higher and bring up the energy next to its higher position. So as long as the crude oil prices is still sustainable, I'm seeing that there might be some of the moves that will come in going forward for energy stocks. Okay. Then maybe go through one by one to see what are the solid sectors. Like construction sector, I think is still good, but it is waiting for some catalysts such as election team and whatnot. Okay, so basically, I'm looking at construction sector on that particular catalyst, but right now seems like there are more downside risks in terms of the short-term movements before we can see some good rebound move ahead. So this is the first wave down, rebound. So the second wave down, hopefully it can sustain around the moving average 50 before moving higher. Definitely, this is already breaking out. So it should be performing the breakout, pullback, and continuation pattern. Just that we are waiting for it to happen. Okay. Yep. So consumer products seems like a bit of a mix. I think ahead of the Raya and things like that, people are still banking on some good positions, good moves here. But right now, it has been seeing some resistance along the 591, and therefore it is still pulling back. So I am still quite skeptical on this because sentiment-wise, they are in a mixed sentiment. So I don't see any rebound move yet unless it can sustain around the 579, then it rebound higher, then we can have a good trading range of 579 to 591. But if not, then we might be looking at this as just a correction phase or continuing of the consolidation phase for now. So other sectors like okay, let me check one by one. Yeah, maybe fledging or even fledging is also down. Small cap index, let's see. I believe that it is still in a negative path as well. Yeah, it is in a consolidation phase, and yeah, it went even lower today. It's 19641 level. Hopefully there is some rebound, but if not, then I'm expecting some further downside risk on small cap. So you have to be very selective on what you're trading right now, because it is not as easy as 1 month ago, whereby it can it is still maybe at this range. It may collapse one day towards this range, and it may only rebound after the sell down phase. So I'm still looking at this week as more selling pressure as compared to buying interest for now. Okay, medium and small cap. This is small cap index. Yeah, it's down as well. This is 9th of May. Yes, correct. It's down as well. So nothing much to look at. But financial services, I think there might be some interesting rebound happening soon, as people are looking into interest rate high environment. People are also anticipating that Bank Negara is actually try to revive or resume the interest rate hike direction as compared to in tandem with the Federal Reserve tone. So that is why it is still quite sustainable. It is still actually in the upward trending tone because of this higher low position. So it is still making higher high position as well. So basically they are in an uptrend move. Just that right now it has some selling pressure last week. So perhaps people are still skeptical, but I am quite all right to look at the financial services sectors right now, because they are healthy in terms of the uptrending move. We are waiting for the actual FOMC, sorry, the Bank Negara meeting statement to say that they are going to increase the interest rate. If that happens, then perhaps the financial services counters will take a strong boost from that point until perhaps another rally, and we should be seeing some retests of the 17,000 level for financial services index. Okay. Healthcare need not to say much. It is in a downtrend position right now, even further down. So there isn't much to say except for the earnings are still in the potentially consolidation phase. Although they might not be having what they might be, the earnings might be higher than the previous pre-pandemic level, but I think it is not as not as sexy as what we have seen much earlier in 2020 and 2021 in terms of their earnings. So I think based on that grounds, healthcare sector might not be interested to look at. Okay, so the next one is the industrial products. Industrial products, and this is interesting because of their nature. Some part of it is building materials, and some part of it is EMS, electronic manufacturing sector. Although early on, when people talk about the recovery theme, they also talk about the building material segment that is going up higher because of the recovery theme. But since the lockdown is more rampant in China, we have been seeing selling pressure, mounting up in industrial products. So that's why even though they are trying to they're trying to make a higher high and high lows formation here early on, but it didn't work out too well, and it is actually having some selling pressure right now. So this is not as decent unless China can stop their zero COVID policy and perhaps move into restarting the economy. Then that perhaps may contribute to a rebound in industrial product. But if not, then we are going to expect some downward cycle in terms of the steel sector, and also P metal and all those aluminium counters are going to take a beating for the time being. Okay. So plantation is still strong, just that it has been taken a slightly a beating because it is the CPO prices, it has been falling, and therefore we are anticipating that it should follow the CPO prices. But again, this move whereby if right now is ahead of their earnings season, people would be trading now, because we know that the January to March average price of crude palm oil is actually higher than last year's and also last quarter's the last quarter's price, and that should bring up the earnings in the upcoming May, and therefore it should provide some good boost towards the plantation stock. So that is what I'm thinking for the team right now, based on these grounds. Okay, so I'm actually anticipating plantation to continue to sell down until there is a rebound in CPO prices, and hopefully it will rebound in ahead of the earnings season, and that should give some good booster towards the plantation stocks to at least retest the previous high around here 8744 to 9030 level. Okay, so this is what my anticipation is because of the earnings season is coming up, and CPO prices for January and to March is much better as compared to last year and also last quarter, and therefore it should give some good rebound continuing into the May reporting season. Okay, property doesn't have much impact here. It's still selling down, so I think we should avoid. And the next one is Reits. Actually, Reits is very interesting. It's just about to start. I would say that it's just about to start because the breakout happens before the festive season, and right now it's just some profit taking activities. And if you look into the index itself, this was before the pre-pandemic level. And why I have this arrow here is because if everything goes smoothly and if we can see some good recovery in terms of the economic activities, and also the festive season has shown us that there are a lot of pent-up demands in terms of consumer related spending, then we might be able to get back to the previous range, which is around the 964, or even maybe say lower around the 945 level. So that is my anticipation, because we are going back towards the previous mode of consumer spending. Therefore, they should recover back towards that level. But if you are saying that even the office towers and also the residential and things like that are not improving as compared to the commercial side, then maybe this will be also another way to look at it, because the REITs covers from commercial, residential, until maybe hospitality, until healthcare, until whatever it is. Then if you are toning down your in terms of the expectation on REITs counter, then perhaps this range of additional 11% would be the range that you want to be trading the REITs until that level, which is around 868 or even 893 level. So I'm looking at REITs counter as a recovery team, and people are less likely to talk about it because it is very slow. They are just paying dividends. Okay. Technology has a real massive sell down again. Today, there isn't much of volumes, but I would say that they are still in a downtrend mode. It's not really conducive to trade right now. So I think maybe traders might avoid it. Okay. Telco is quite related to the 5G, movements. Let's see whether there is any new contracts or even new news flow on this telco. But for now, I think it is also waiting for more news on the broadband and also 5G related transitional period. So I think we should be avoiding for this right now. Transportation, I'm looking at it as recovery team as well. They are tagging along with that, but they're not really conducive right now to trade. It is in under the consolidation phase. So if you're looking at more of the trading or more of the very interesting stocks for next 3 months, I think you should be looking at plantation. You should be looking at REITs. You should be looking at crude oil related energy counters, and perhaps selectively you are looking into transportation and utilities. So that's about it for now, because I don't see any other catalyst that's prompting up for the time being. Okay, so before I go into the stock picks, I think if you want to have your stocks being reviewed, you want to have your Q&A being reviewed later on, please make sure you have shared this video out to your friends, circle of friends, and you have to have the share badge later. I mean, before we can actually review on your stocks, and make sure you also like this video so that we can actually produce more of this kind of updates for you all going forward. Okay. So talking about the alerts or the daily picks that we have put in, it's definitely those related to consumer. They're related to oil and gas and things like that. So overall, I would say that these are some of the stocks that we have selected, and they certainly have the characteristics of trending higher tone, or they are under the same thematic that we have mentioned, which is the oil and gas sector, the recovery team, the consumer sector, and things like that. So Charimin and Dilem definitely fulfills all these criteria of uptrend move, and it has been breaking out, and the signal came in around 73.5 cents, and right now it's traded near to a 75 cents. So that is where we are in this sector for the time being. Charimin is definitely also another one breaking out above the previous day's high and trying to see further upside. And these two companies definitely are having good movements due to the crude oil prices is strong, and also their net cash position. Because under this scenario, it may also go into stagflation or even recession period, whereby we don't have a lot of improvement in terms of economic growth, and also inflation are high. So stagflation, and even worse, we are going to recession. Then perhaps people will also look into net cash position companies. So net cash is very important under these two scenarios. So people might be taking the advantage of all these net cash companies. So Charimin Dilem has fulfilled that. So that's why I put it in, and they're fulfilling the energy sector kind of companies, and therefore they are also one of the top performers, at least for today. Under today's scenario, you can see that only 170 stocks are up, near to 700 companies are down, so it's near towards 2 to 7, two gainers for every 7 decliners. Yeah, so that is the ratio today. So even that scenario, we are actually picking up the stocks quite well, even though we are in a very negative position. So yeah. Other than that, Fiamma is still uptrend in that position. We thought that the consumer electronics products will also maintain well, but perhaps this selling pressure today would mark potentially the end for the the uptrend tone. And if it is not able to sustain above the 94 cents level, I think this will be going to a cut loss position. So for Fiamma, it's still uptrend in that position. It has given us a signal around 1 ringgit zone, and it has been seeing some selling pressure. So I think you have to be careful on this because it doesn't. If it doesn't hold above the 94 cents, perhaps it should continue to go downtrend. Okay. The other counter is Power Root. We are still having some positive view on this counter as long as it is still hovering above the 148, especially when things are selling down, but it rebounded again over the past 2 trading days. Today itself is also having some good movements. It's sold down towards 151, it rebounded towards 155. Volume is still thin, and the indicators are still strong at this juncture. And if you base on the longer term view, it has been turning into a sideways ranging mode over the past, uh, 1.5 years period since June. Yeah, June in 2021, it has been falling and has turning sideways, ranging from 123 towards 150. So it's a 25 cents range right now. It has broken out above the 148. So I would expect another 25 cents range that may see some good booster towards the 175 level. Actually, we are waiting for the results to happen, and when that happen, maybe these stocks will again, continue even to higher position. What I'm interested here is that since that the BJ Food, BJ Food is also beverage companies like for instance Starbucks. Power is also in that line of selling beverages. So perhaps we might be able to see some similarity here of stocks being traded higher under the consumer sector. So that is why we have put in Power Root, and since that they are giving us some signals around the 155 zone. I'm expecting this to even go higher ahead of their results, and especially the strong volume came in around 140. I am suspecting that some insiders or some of the owners or some of the traders have are speculating that their earnings are much stronger, therefore they are putting it. Okay. So Teoseng, we put it in because we think that there are some good potentials under the consumer sector and under the recovery team. Lehan is also furniture related counter that benefit out of this stronger US dollar theme, and that should benefit their earnings going forward. So let's see. Because they have also net cash position, they have also good dividend use. They are also, being quite so-called in time, in line with the US dollar strengthening mode, and perhaps that should allow some of the traders to trade based on that catalyst. So overall, I say that they are in the turning point position because the indicators are turning much positive as compared to earlier position, and hopefully that there could be some good breakouts coming ahead of their result season. Okay, Hexstar, I'm still anticipating things to happen for the chemical related earnings that will be coming in May because of the spike in terms of the so-called the under this scenario of chemical products or agricultural chemicals that are more expensive due to this Ukraine and Russia war, and this should be able to see some good performance in terms of their earnings going forward. But all these are in the speculation phase. But all in all, you can see that over the years, the Hexstar, Hexstar industry or Hexstar has been performing well, and the earnings I think should be also part of the factors that they are actually moving into a higher position territory due to that factors. Okay, so the other one is Genting Malaysia. So these are some of the training ideas that we put in for today. And Genting Malaysia definitely is due to the so-called festive season, and people are actually traveling to Genting more often than not than as compared to before. So Genting Malaysia definitely will be part and parcel of a stronger position going forward, especially when a theme park is open and people are traveling there. You can see the cable car is full of people, and this is definitely one of the good signs that Genting Malaysia should benefit out of it, and very likely their earnings should recover gradually in the month of May onwards, and we should be anticipating a breakout further above the 320 towards the 365 level for Genting Malaysia. So that is why we are putting it in just in case it triggers us anything. Then that should be the signal going forward. So these are some of the trading ideas for today. Therefore, you can actually look out for recovery team play selectively, consumer, tourism, and also Reits sector. For oil and gas, you should look out for perhaps those that is correlated highly with the crude oil prices and also having net cash position. And under this scenario, like I say, we don't know whether we are going through the stagflation or even a recession down the road, 6 months or 12 months down the road. But at least if they are having net cash position, that should be able to weather through the storm, and also investors will be more liking or more likely to trade on all these counters based on these characteristics. Okay, and I think plantation stocks will wait for the selling pressure done over maybe overdone maybe by this week, and then hopefully that they will pick up the shares in a cheaper manner and hope for a good quarterly earnings, and they should be able to sell after the earnings. So that is the operation, how you should be operating your stocks under the plantation sector: buy before the earnings and sell after the earnings, at least for this particular quarter. Okay, so if you have not shared this video out, please share and get the sharer badge. And in order for us to review your stocks, I will take 5 minutes from now to 1:05 to talk about some of the questions that are being asked by the audience. And I think first question is about EcoMate. EcoMate is also under the furniture related counter. Like I said earlier on, it might benefit out of this situation of stronger US dollar, weaker ringgit position. And EcoMate has certainly made a very good rebound since 40 cents towards the 52 cents level. And right now it's just moving into the consolidation phase. So if it is able to form a good rebound along the 47 cents level, I think that should be a sign for us to buy on support, sell on the resistance around 52 cents. But I'm more interested if they are they have just announced a result in April. I believe that the results is much positive. Let me check. So the results is 3878. Okay, 3878 in February. So they released their results much earlier in the February quarter. So so they have to report it in end of April. So they report it during 25th of April. So let's see what is the results in January. Let's see. It is 2624. Okay, so 2624, it has went up to 38 something. Yeah, so it is definitely an improved quarter Q on Q. So that's why you can see the share price has been reflecting some of the earnings ahead of the earnings. They have been traded higher since 40 cents towards the 50 cents. So I assume most of the companies under the the furniture related sector should be performing a similar case as well. Q on Q should be higher. So in that anticipation, people should trade higher on the furniture counters. But right now, after the results, perhaps people are selling on the news of the results, and therefore profit taking activities might come in towards 47 cents. If there is a rebound above 47 cents, then we should be able to look at 52 cents or even 56 cents. So if we have the view that US dollar MRR trend will continue to be on a strengthening path, so which means that stronger US dollar going forward at least for the next 3 months, and that should benefit the export related stocks, and you should be able to trade on Ecomate again for this another round of rally, perhaps towards 56 or even higher. Okay, so we need to really see what is the earnings that will be coming in during the month of July. Okay. So another few more counters that to be reviewed is MFLA. MFLA likely to not benefit under this scenario because they are likely to be hit by the higher raw material price, which is the wheat, because flour is from the raw material of wheat. And therefore, if we're looking at that kind of movements in raw material prices higher, then technically speaking, they are likely to bound for margin compression, and therefore earnings might be softer than expected, and therefore people are selling off ahead of that. But again, you can also argue that they can actually translate this raw material price to consumer and end consumer end user, or even try to mark up their price to make back the losses. But again, overall totality is not good for them, so they need some time lag to transfer this cost to the end consumer. It takes time, maybe 3 to 6 months, or it depends on how their pricing mechanism is. But again, under this scenario, definitely it's not going to benefit them too much. So that's why early on people thought that they might be able to translate to end users price, but after that, if the wheat price is still maintaining at a very elevated manner, they are hardly able to translate to end users price, and maybe they have to eat into their margins. So margin compression might happen in this scenario. Okay, so in terms of technical wise, because we have talked about the fundamental side of things, then technical also have some similarities here, which is they try to break out above the 70 cents but unable to break out, and prices are actually falling, and this is still under the potential consolidation phase towards perhaps the around the 60 cents or even 57.5 cents level. So I think it is still taking some time for the consolidation phase to happen. So another one is Genting. Genting, let me wait for the chart a while. Genting is more exposure in terms of the international perspective. It needs to wait for more and more countries to allow the easing restrictions on SOP. But technically, if we are already going into an endemic position on the COVID-19, where is the place that we are looking at is definitely the area of 4.92 towards 5 ringgit zone. This is the pre-pandemic level, which is before the sharp sell down. That would be the range that we are looking at. So ultimately, we should be able to look at 520 level for that particular Genting's share price may land around this area of 490 towards 520 zone. So that is just the idea on Genting. But I'm more preferable to look at the Genting Malaysia, because Genting Malaysia should be able to pay out dividends to Genting, and therefore that you will be benefiting out of the scenario, because in a local perspective we might be able to get more understanding as compared to bigger Genting Berhad. They have more than just casino, resorts, and other businesses as well. Maybe Genting Plantation, maybe some other research, Genting Bio Research as well. So all these will contribute to Genting's earnings, but also may drag Genting's earnings as well. So it is not as easy to analyze Genting as compared to Genting Malaysia. So what I'm seeing here is that we are basing on the sentiment of recovery team, and they might go back to the what level is it, 490 and also 520 as of this juncture. Okay, so the other company that people asked to review is M Bank. I would say that banking stocks are still more favorable under this scenario, whereby the whereby if people are looking at interest rate hike environment going forward for Bank Negara, then people will still continue to maintain a positive view on banking stocks. So need not to say much. I think it is in uptrend position, consolidation phase. We're waiting just for the 370 to break out. And if there is a news on the Bank Negara, increasing the interest rate, then this should be able to break out above the 370, and the target will be around the 4 ringgit level for mbank. Okay, CIMB is still the same thing, still in the same structural manner, but I think it is also it is also a function of which banks are more attractive. So currently, I think they have been rallying much stronger, much stronger as compared to other companies under the so-called banking stocks. So they are not so favorable anymore. They are making into a lower high position, and lower low position has been seen as well. So this is definitely into going into a consolidation phase. So if you are looking into a stronger position for banking stocks or even CIMB specifically, then we are actually expecting where are the trading range that you should be looking at for the breakout is definitely at the 5 ring and 40 cents, or even if it can break out over 557, that would be better. So if you're trading on a short-term basis, then perhaps 5 ringgit zone, you can actually take a position and wait for the rebound towards 540 and sell off the CIMB. But again, it is not as strong as other companies such as mbank, Affin, or even Maybank. So if under banking stocks, you may have other stocks that is stronger than CIMB to trade. So why not you trade other companies, right? Okay. So there are two more companies to tackle. One is FGV. People ask about it. FGV is under the plantation sector. It is pulling back according to the CPO prices. But again, I'm expecting the earnings to come in strongly for at least May reporting season. So anything that is going to pull back perhaps to a good discounted position, I would say that it might be a very good position to enter based on the understanding that January to March is definitely a good month for the CPO prices, and therefore the earnings should be stronger, and likely that should be able to push the even the plantation stocks higher. And don't not forgetting about the dividends that they might be pay out, may be a windfall dividend. Okay, so that is about the FGV or even plantation counters. Okay, and lastly, we have the Mobilia. Mobilia is under the furniture related counters as well. For this position, I think it may be a weaker furniture counter that I'm seeing right now. So 19 cents, 22 cents, and even 23.5 cents. This will be the range that you might be trading. So support is around 19 cents towards 17.5. If they are hanging around this level, you might want to pick up based on just buy on support and sell on resistance kind of move. But if you're trading on a longer term perspective, then you might want to wait for the breakout above 22 cents or even 23.5 cents in order to hold it longer. But based on the movements right now, I don't see it as a very strong position to enter, but instead it's just a buy on support and sell on the resistance. Okay, so that will be it for the M Plus Weeks highlights. But before you go, I just want to promote tonight's webinar. We have Synergens with Synergens Berhad, which is an IPO going to be listed soon, to join us for retail briefing. And there will be a link under the comment section, and you can actually look, click into that, and register just in case you're interested. Definitely today we have 4 person from Synergens. The management team will be there, and we will try to do a casual talk and on this company to see what is the strength for the company, and hopefully you all may benefit out of this webinar tonight at 8 to 9 p.m. So you can actually put in your registration later on through the link in the comment section. Okay, so that's about it for today's webinar for M Plus Weeks highlight. Hopefully that going forward there might be easing of the tension between Ukraine and Russia, then inflation might not hit us so badly, and hopefully that these are just hopes that we can just hope for the best, because we can't do anything about the Ukraine and Russia tension. We can't do much about the inflation. We can't do much about the COVID situation in China. So this is just hopes. But if all this miraculously disappear one day, then you should know what to invest in, okay, going forward. So that's about it for today's webinar. Thank you for tuning in, and we'll see you again next week. Thank you and bye bye.